Hi everybody, welcome to the BizNews Finance Friday webinar. With me today, I've got Magnus Heystek, one of our favorite independent financial advisors. And as many of you know, he's written many personal finance books. He is the founder of Brenthurst Wealth Management. Not only is Magnus a journalist, with awards behind his name, but he's managed to build up his business so that he has 8 billion rands worth of assets under management, I believe, Magnus. Is that right?
That's roughly correct. Yeah, depends on the markets and the state of the rand, but that's roughly correct. Yeah, we're very pleased to achieve that level. Thank you.
Great. And then we've also got Martin Freeman, the Chief Executive Officer of Orbvest. And Martin, you are an entrepreneur. You've started a number of businesses, and the reason that you're with us today is because you're an expert on the global real estate market. So welcome, Martin. Would you just like to briefly outline what kind of assets you've got under management and what kind of interest you're getting from South Africans in global property investing?
Well, thank you, and thank you for having me on your webinar today. As you correctly said, in terms of our asset class, we're in real estate. We certainly continue to receive a large amount of interest from not only South Africans, but people around the globe who want to invest into safe, stable assets, and certainly want to, for South Africans, take their money offshore. And so our portfolio is over $300 million and climbing rapidly. And so we continue to assist South Africans investing into safe, stable assets in the USA.
Right. Thank you. So the hot topic is investing offshore. And Magnus has been telling people for years that's the smart place to put your money. There's been a lot of skepticism about that. But Magnus, I believe that people are starting to come around to your way of thinking now, including people who've been quite critical of you in recent years.
Well, Jackie, the facts speak for themselves. And I think that there's been a lot of vested interests that were threatened by my recommendation to take some of your money, and in some cases, all of your money offshore, it depends. But I think that the facts after almost 10 years of underperformance is very difficult to argue against. And we're not talking about marginal underperformance, local versus offshore. We are talking about over 10 years, the local market has done 9% in rand terms, and the offshore market has done 19% in rand terms. And the 5 years, it's even worse. The local market has done 1% per year, and the offshore market has done 16%. So what prompted my local column, which is going on to BizNews on Monday, is that the fund managers themselves are now starting to begrudgingly admit maybe we need to get more money offshore. I mean, the Rainmaker Fund from Nedbank this week acknowledged that they should have had more offshore, and they've applied to change their mandate. They're going 30% offshore now. We've had Tasted Chewy, one of the founders of Coronation, speaking to the asset management industry, where he's saying, if you don't have an offshore fund, or offshore capabilities, you're dead in the water. By implication, he's saying the same to the investors. If you don't have some offshore exposure in your portfolio, you're going to be dead in the water in terms of your investment returns. And it's coincidental that today on Business Live, you had Bruce Whitfield wrote a brilliant article about where he addressed his fund damager, not his fund manager, and he was complaining bitterly in his usual acerbic manner that there's something wrong here. My retirement funds have not grown in 5 years. Is it fees? Is it Regulation 28? What is the problem? And he's now sharing on the internet and to all his followers, and he's got millions of them, the experience of everyday South Africans. So South Africans are now waking up to the fact that maybe the advice they've been getting has been vested, has been biased, and has not been in their favor. And so hence today's program, how to get more offshore exposure in your portfolio without costing you too much money.
And Martin, that's one of the questions that we get every week is how do you actually start with building your offshore investment portfolio? What steps do you suggest?
Well, before we get to the steps, I just wanted to add to what Magnus has said, and what we've been saying for many, many years is that to not invest offshore, you'd simply be crazy. You know, originally many years ago, you were prohibited from moving your money offshore. Then even when they introduced it, there were severe restrictions. And, you know, the reality is that it's changed so significantly over the last couple of years. Whoever you are, wherever you are, it is simple. You're allowed R1 million per person. You're allowed an amount for your children. You're then allowed through your FIA, your foreign investment allowance, to also take out additional amounts. And, you know, it's a simple perspective. As a South African, and I've got all my friends and my family in South Africa, I visit consistently, and you have a bucket, and that bucket has got holes. It's leaking all the time from the various SOEs to all the government departments and the various articles you see every single day. Reality is that the bucket is leaking and revenue is being spent at a rate more than what the government is earning. Sooner or later, the chickens are going to come home to roost, and it's going to impact normal South Africans more than we've currently seen to date. And that's also going to impact the currency. The reality is, if you look at the rest of the world, is you have a buoyant economy in the rest of the world. You have strong fundamentals. People are earning consistent returns because those are global brands. And so to simply be stuck in South Africa when you have the luxury of investing anywhere in the world is simply crazy. And so that's what we do. We offer South Africans an alternative. There's great companies like Brenthurst where you can also invest into. Our particular niches, we do real estate in the USA.
So this ties in with the first question then from a gentleman who says he's 49 and should he stop paying into his RA and start sending his money offshore, particularly in the light of Regulation 28 changes looming? What do you think, Magnus? Should he just stop everything?
I was dreading that question, because if I'm going to say stop your RA, I'm going to have this 500,000 financial advisors on my back and the institution saying you're talking rubbish, and all those clever actuaries are going to come with counter arguments. You can still make the RA work for you because it does have some attractive tax advantages. It's not in your estate, protected from creditors. However, you must be far more careful in the way that you structure your RA. And what we've been recommending to our clients, for those who wanted, we've put them 30% direct offshore, which you can. So you choose a low-cost offshore fund in your asset allocation, and the balance we've skewed towards cash and bonds, which has been great, which has been giving returns of about 11%, because we've avoided South African assets. And for the simple reason, what is happening, the average South African who gets his advice from his average embedded advisor ends up with this sort of same portfolio in his retirement fund, his RA, his endowment, and his unit trusts. There's been no clever planning, and there are a lot of advisors who've done it that way, but the bulk end up in the balanced fund space, and invariably in the heavily promoted ones, with lots of powerful brand names, but that has failed. That strategy has failed you. So there are ways of doing it to get the tax benefit. But when you reach the age of 55, there's no doubt in my mind that you must really reconsider your RA contributions, stop the existing ones, get the 1/3 that you can out of the hands of your current investment and get that either offshore or into your pocket, and then convert it to a living annuity where you can now restructure, get your costs down, get your performance up, and get your offshore allocation up, in some cases, to 100%. And that penny is now starting to drop in a very, very big way.
Jackie, if I can just jump in here and say something also, is that, you know, one of the keys to successful investing is diversification. And, you know, without pointing someone in a particular direction, a well-known economist once gave a great talk that I was attending, and he said, if you were hypothetically sitting on another planet and you looked across at this planet called Earth, and you had these options of South Africa and Asia and Europe and America, what percentage would you put into each of those areas? Would you seriously put 100% into South Africa? Or if you had to divvy it up in the world, would you potentially put 10 or 20% in South Africa? And that's a startling thing to think about. I think for most South Africans, they do obviously live in South Africa and they have various expenditure. to support. So a portion does have to be in South Africa, but bear in mind that if you compare the returns that you're going to get in South Africa versus offshore, where you're getting in US dollars and various other currencies, and for example, in Orbvest, we pay 8% in cash dividends per annum through our real estate that we acquire. And there are similar places where you can get very strong returns, regardless of whether the currency stays where it is or depreciates. At least you can sleep well at night. So that's my advice.
That sounds like very high return. What do you think, Magnus? Do you think that sounds like something that you would put your clients into, or how would you view those kind of investments?
Obviously, we're actually busy with the due diligence on Orbvest, and if it passes our due diligence, and it looks like it will, I could recommend that because it's a very specialist niche in the property market. You're talking to the doctors and the medical specialists, which is a very niche market in many respects, and I can't see why that's not sustainable. Obviously, all investments, irrespective of how good they might appear, and I'm talking about all investments here, always have an element of risk. But as Martin has said, if I can give my clients with a portion of their investments, and they do ask for dollar yields, because remember, dollar yields are very low elsewhere in the world. If I can give them anything close to 8%, they will be very, very happy with that as part of a global diversified portfolio. You do not go and put all your money in one asset class ever, because we've seen with global real estate in South Africa, worldwide, if the tenant's not paying, it's in fact your income is gone. But if it's well managed and it's a good quality base of tenants paying, I can recommend that very much so. Dollar income at 8%, I will take any day.
Thank you. Now, Martin and Magnus, there's a gentleman who's been wanting to ask Magnus in particular questions for the last couple of weeks, so we haven't quite got to them. So Arthur says that this is a good time for him to ask about investing offshore. Most of his investments are cash-based and ridiculous interest rates now for big capital amounts. I welcome a chance to get advice for this and who to chat to, he says. And then in another question which he sent, he mentions that his large fixed investments are now yielding very low interest, and he's trying to find a reasonable, safe offshore investment option. And some of the ideas that have been put to him are the Satrix shares, he says. And so that's part one of his question. Second part is, what is the process for getting the 1 million offshore? So perhaps we could just start with you, Martin. What do you think about the basic question there that he's asking about where?
Well, I can speak as a South African. So when I was in South Africa, you know, I was a private client with many of the well-known banks. And every year I used to get these poor returns, or alternatively, I'd put my money overseas into these very low interest bearing accounts in USD or pounds. And it was quite amazing when my eyes were opened to really investing offshore, as we're speaking about today. And all of a sudden you do realize it is the reality that you can earn 5, 6, 7, 8% overseas. It's consistent. It's in a high growth environment. And it's a simple scenario. Do you want to be investing in the kind of companies in South Africa that are really localized in terms of what they do? Or do you want to be investing in companies offshore where potentially they have a global presence and they're highly resilient? The word at the moment being used in America is they're very anti-fragile, so they're recession-proof, or alternatively in stable real estate. That's your choice. But certainly from my perspective, I think most people would agree that those that have tasted offshore in the last couple of years have done incredibly well.
So if you don't have money to put into real estate, because often you tend to need quite large lump sums for property, what is your starting point? What do you suggest, Magnus?
Well, you know, even with small amounts, 500 Rand a month, you can get access to a South African asset swap global fund, and been getting returns of 15% at a very cheap price. The My Plan Global Macro Fund is one we use. Net Group has got a couple of good ones. There are many easy ways. 500 Rand, so money is not the problem. It's the advice that you get, or the awareness that you have of investing SA versus the rest of the world. And we've been having seminars with a lot of our clients for many years, showing them facts, not emotion. And it's after you've given them the facts, it's a fairly easy call for them to make to start investing offshore, because this low return, no return trend has been coming for a long time. Some of our top brand name funds in South Africa have given you over a 5-year period a return of minus 25% versus a 100% return offshore. We're talking substantial differences, and people are really working it out. As Martin's saying, people are opening up their statements year after year after year, and there's been no growth. And eventually the penny drops. Why?
And is that high fees, would you say, rather than performance of the markets?
It's not only fees. It's the vested interests of the large local companies who do not want to let go of their money. They charge high fees, but it's also the bulk of their business is in South African assets. So they've been defending the SA situation for a very long time, and they still do. They keep on saying, you sell now, it's the worst possible time, the upswing is coming, you're going to lose out on the upswing. So it's a combination of vested interest, fees, bad advice from the embedded financial advisors who get different incentives to place funds and to retain funds with certain companies, even though the performance is dreadful. It's the only explanation that I have. Why would somebody not advise something else? Because it's a vested interest that keeps it there.
Thank you. And then, Martin, this one for you. The Rand, when you look at it, the Economist says that it is quite undervalued in relation to other world currencies. Does this mean that the Rand is going to rebound at all? Is this perhaps a bad time to go offshore? What are your views on playing the currency game and looking at the Rand in relation to hard currencies?
Well, I'd be fascinated to find anyone that can accurately predict the Rand, given its volatility. The one thing that we can say, and I think we all agree on, is that given the fundamentals of the US economy and the large economies versus South Africa, there is no doubt that we believe that the currency will depreciate consistently over time. And if you look at our investors that have been investing right from the times of 10, 11, 12, all the way through 14s, even at the moment right now, there's enormous demand at 16, because regardless, if you're going to get a good return every single year, whether the currency stays where it is or whether it depreciates, if you're living in South Africa, it just means you're going to get from dollars back into rands a greater return. That's my perspective. I think that the Rand will consistently depreciate over time. I don't think you should ever try and time the investment of your money into the USD. I think you should just do it consistently every month or every quarter. As Magnus said, you can get in from 500 Rand. In our scenario, it's from $5,000, and you then become a real estate owner in the USA. But whatever it is, you know, just like I always say to everyone, you've just got to start sooner or later. It's not as scary as you thought. In the past, maybe it was. Nowadays, it's so simple. You can go to Players and be invested literally within a couple of days, a few $1,000s.
And so here's another question. Where do you begin investing if you want to invest in real estate? So Martin, you've mentioned US real estate. I know that Magnus, I think you've got an interest in Mauritius, properties in Mauritius, right? Have done quite well for some people. How do you actually narrow your choices so that you pinpoint a geographic region to start with? Magnus, would you like to take that question first?
Well, there are many ways to invest in property. I mean, my recommendation to buy property in Mauritius is or was based, still is, it's one of the ways to acquire residency in Mauritius, and that has been a very successful way for people to do it. The currency was also a factor, and thirdly, what's happening in Mauritius now is that they've made it easier for South Africans to acquire cheaper, but that's for residency purposes, to get your permit, to be able to settle your family and yourself, and to perhaps start operating a business from Mauritius. That trend is still incredibly powerful, but it still remains a primary residence. You live in it. If you're looking for yield-producing investments, I would not recommend Mauritian properties. I would rather look at commercial properties in Mauritius, which gives you a return of about 5 to 8% as well. But that's, a lot of people will say all your money in one small island, which is true in a certain extent. Otherwise, you go for global listed real estate funds all around the world, or you say, when I put my money in the richest country in the world with the richest patients and the richest doctors, I want to invest in something where they're paying the rent. You really need to sit down and talk to someone who has a global experience and a global outlook. You know, I can't give you a glib answer and say put it there or put it there. It always depends on so many variables. But I just want to come back to Martin's point about trying to time the currency. We have so many people who try and time the currency. And I say to them, if you happen to be the genius that works out when to buy the rand versus the dollar or the pound, you also must remember that you also have to be the same genius who's going to buy in at the bottom on the other side of the world where your money is going to. And that, of course, is not possible. We kind of say to people, make your call, ask yourself, where do you want to be 5 years or 10 years from now? And maybe average it out if it's a large amount of money, but you're not going to get it right. I've just tell people, buy the dollars now because the market offshore can go up 15% in 3 months, which it has, or it can go down. But just get your money into dollars, because the one point is at some point there's going to be some tightening up of the foreign exchange outflows. I really think that's going to happen in 3 years, or perhaps even less, as our debt situation starts really exploding around us. That's going to be one of the things that government will do.
That sounds quite scary. Do you think South Africans could wake up to a ban on offshore investing, just like they settled down for supper on Sunday night and heard that there was an immediate prohibition on alcohol? It could be that sudden.
That's the way it can happen. It's happened before. I was around as a journalist in '85 when they introduced, no, it was '83, they introduced the FinRand. They closed the markets for 2 days, and by the Wednesday morning when the markets opened, they said, that's it. Nothing you can do. Do not think government will signal this to the market. It'll be an overnight decision, no cigarettes, no drinks, and no offshore investments. I don't know which one is the worst.
Yeah, what do you think, Martin? You don't look like a drinker or a smoker, so I suspect it would be the offshore investing.
Well, you know, in terms of offshore investing, I think that if you have a government that is consistently trying to raise taxes and raise revenue, the last thing you want is everybody moving their money offshore. So I'll allow your listeners to make their own decision, their logical decision on that. I think, again, it just gets back to the simple basics, and that is that you ask the question, where should someone invest? So I will be biased now, and I will say that we chose the USA because we believe that it's a large dominant player and will remain for many years in the world. We believe also that the next question is, well, where do you want to put your money, into which asset class? As we said, you shouldn't have all your money in equities, you shouldn't have it all in real estate. You need to have a spread. But in terms of healthcare, we have chosen healthcare because of the fact that it is so resilient. So what are our typical type of buildings and what do we invest in? Think about a hospital building in South Africa, a well-known one, a private one, let us say that. And that private one has been there for 20 years. It's the same doctors, it's the same medical practitioners. They're going to be there for the next 20 years. They pay their rent, they're profitable, they're very stable. And so that's the kind of buildings we invest into. And so they are off this stable base, producing great dividends, consistently have done for 20 years and will do for the next 20, 30 years.
I think some of our private hospitals haven't been doing so well here because they haven't been able to bring in the elective surgery and so on. So do you think, is that the situation in America as well with these buildings?
You see, in America, it's very different. Certainly, healthcare and medical is deemed an essential service. So most of our buildings have remained open throughout the entire COVID pandemic. In addition, most of these practitioners are well respected, they're well known, they're profitable. And then, of course, you've also got the US government. If you really want to know the real impact of why to invest in the US, they throw around a 2.2 trillion stimulus package. Every single company and individual got something in America. So a company pretty much had their salaries and their rent paid for the entire month of April and May and half of June, which helped them ride through the entire process. So that's the kind of balance sheet they've got to make sure that their various industries are looked after. In terms of elective surgeries and that, we've had a number of our tenants who simply have just had a backlog of procedures, and then from pretty much the middle of June, they've opened up and they are very, very busy again. But again, why do we as Orbvest invest into multi-tenanted buildings? There's a reason. It's because we as the custodians of people's wealth around not only South Africa, but in 10 countries, the primary objective for us is to make sure it's future-proofed. And to make sure it's future-proofed and also reasonably low risk, we want to go into multi-tenanted buildings in a good location. If you lose one tenant, it's not a big issue. You'll be able to replace them. But don't forget, medical tenants generally have leases anything from 5 to 10 to 20 years in America. It's quite astounding. It's not like South Africa where it's 3 or 5 years.
Thank you, Martin. Now, a completely different question from Helene. And Magnus, maybe this one, if you could answer this one. She says, what estate duty do you have to pay on offshore investments? Is there any way, what are these duties, and is there any way you can minimize them?
You know,
Quite
that's
a complicated question.
No, it's not. It's simple. It's we can have a whole debate on this. Your offshore investments are part of your estate in South Africa. If you're taxed in South Africa and it's in your name, it will be taxed. It's part of your entire estate. It's not that simple. If someone has to wind up the estate, you have to have an executive offshore to do it for you, depending where it is. But the simple answer, it's not a way to get money out of your estate unless you at some point donate it and pay the donations tax. And a lot of people do that. They move their money, pay the tax, and it's gone, and then the growth is out of the hands of the South African estate. But it's part of your estate, no problem.
Okay, thank you. And then here's another one, Lynn. She says she's about 5 years away from retirement, and she wants to know, is it wiser to use spare cash towards paying off a bond as quickly as possible, or investing that money? What do you think, Magnus?
There your risk profile comes in. Paying off your bond gives you an immediate return of 7% or thereabouts. That's the bond rates, versus what can you get over time. And that's always a little bit of a guesswork. Can I beat 7% with my investments? Historically, you have, but is there a guarantee? No. So what is your risk profile? A lot of people don't repay their bonds, and other people, like myself, have never repaid a bond because I like using the bank's money to invest somewhere else. And over time, I've made much more money, but my risk profile is slightly different than other people. Some people simply cannot take risk. They need to repay their bonds.
Thank you. Martin, have you paid your repaid your bonds over the years? How do you handle your own property investments?
Well, personally, I'm not a person who loves debt, and so I have. But again, over time, as you start to find better alternatives, so again, I've moved into Magnus's camp where, you know, ultimately understanding that there's good debt and there's bad debt. So bad debt is consumption debt. It's when you're borrowing and you're spending and you're going on holidays. Good debt is when you're borrowing money or getting money and you're investing it and you're making money from that money. So in our properties, for example, when we leverage or we gear a property, and what we do is we buy a building with a certain amount of debt and a certain amount of equity, you're getting almost an amplified return, but it's still in a very low risk environment. So each person is very unique and different, and it's really your own personal risk appetite.
Moving away from property, but still sticking with the theme of healthcare, we have a question here from somebody who wants to know about if you've got any thoughts on the Signia Oxford Sciences Innovation Fund. And Magnus, do you have any comments you'd like to make on that one? I think, yeah.
Yeah, I'd like to disclaim that I've invested some of my own money in that fund, and we have been assisting Signia and marketing that to our clients, so that's upfront. And we did this after a very extensive due diligence on the Oxford Sciences Innovation Fund, which very briefly commercializes all the patents and innovations coming out of the Oxford University for life. And the primary example right now is the vaccine against COVID-19, where the Oxford University research team are the front runners to get and develop the vaccine. They've done a deal with AstraZeneca, the very large British pharmaceutical company. They've got $1 billion worth of funding from President Donald Trump, and they're about to, and I think it was front page of the Bloomberg yesterday, that they're about to roll it out commercially. Now, that is even remotely successful. The OSI fund will benefit tremendously. The good news is you can get it offshore in large chunks. That's for the private equity players, large amounts of money required. But you can get it locally with Signia in their living annuity, retirement annuity, and endowment options for as little as 50,000 Rand. And I have invested in that for all my kids and my grandkids. I've said to them, open this envelope 10 years from now. I think you will make money. It's in the right space. It's conceptually, it just makes so much sense. And there's a bit of a window of opportunity until all the shares are taken up. So I can recommend it.
Wow. And then what about the fees associated with that fund? Are they also lower than your average fund manager's fees?
No, they're not. They're private equity fees. Magda was very insistent. It's not an index fund that simply just backs the fund and you don't have to do any research. If you understand the Oxford Sciences Innovation Company, got a lot of very smart and expensive people doing the research individually on all these vaccines that come out of the university, all the patents. So this is it's not a cheap product, and it shouldn't be a cheap product. You're not going to argue about fees on this one. Mark my words, Jackie, you and I will talk about this 5 years from now, and we're going to say, wow, that was the Tesla of the medical world that we should have invested in. I really feel strongly about it.
So even better than buildings that house doctors and things who are paying their mortgages.
With this kind of investment, I'll be able to buy one of Martin's buildings 5 years from now.
So, Martin, do you know much about the Signia Innovation Fund? Have
No,
you been watching developments there?
About it. And as I say, people should diversify across a range of assets. And if they've got great opportunities, absolutely.
Okay, thank you. And now, what do you think about biotech? Is that still a good niche? Is the next question. What do you think, Magnus? Is that kind of related to the fund?
You know, I started writing about biotech in 2011, and we managed to get a biotech fund placed on our platform for our South African clients because nobody knew what I was talking about. I didn't know what biotech was until I went to a conference where John Malden, the very well-known investment fund manager, spoke, and I then spoke to him afterwards, and I said, tell me more about biotech. And after that lecture, I realized we need to get into biotech. It's and OSI, by the way, is in that space. It's the biotechnological innovations. So we still like biotech. Our clients have made humongous amounts of money with volatility, but they've made excellent returns in excess of 25% per annum over 10 years in the biotech fund. I mean, those are just astounding numbers. And you can't get it in South Africa. You have to go offshore to get that.
Have you been looking at biotech at all, Martin, or are you just purely focused on property at this stage?
Absolutely. We're looking at biotech and life sciences. It's two areas that I think that if you really understand the healthcare niche, you know that that's going to be dominant going forward. Magnus is 100% correct. In the US, however, there are a lot of industries where as they get these R&D grants, which run into the hundreds of millions and the billions, you simply don't know as a tenant which are going to be the ones to survive and which not. So it's much better to rather go Magnus's route, where it's via a fund where it's across a number of entities, rather than looking at a building where you've got a couple of tenants and some of them may or may not make it. I think in the next 2-3 years, you'll see Orbvest step firmly into the biotech space. Also, if we could get buildings right now that have solid tenants, we would. But again, it's very competitive in that space because it's in demand.
Thank you. And then we've got a lot of questions about 12J companies. What do you know about those, Magnus?
Look, 12Js are been heavily promoted. It's a section of the Income Tax Act that gives you very handsome tax write-offs if you invest in a Section 12J company. A lot of people, a lot of advisors like them. They've been selling them, and we have looked at it from Brenthurst's perspective, and we've declined to get involved for various reasons. We just were not comfortable for a variety of reasons. But again, people will disagree with me and saying we need to support 12Js because they support the tourism industry and job creation. But we kind of question sometimes if there's this massive tax incentive to invest, that the actual inherent investment returns are overlooked. So we've decided not to get involved, but I could be proven wrong over time. But we were just not comfortable recommending that to our clients, and we've declined.
Okay, thank you. Martin, do you have any views on 12J companies?
As it goes to the underlying investment, 12J is generally very restrictive in terms of its nature in focusing on South Africa and growth and employment in South Africa. And our simple view is that if I have the chance to rather invest offshore, I'm going to take my money offshore. I'm not going to be sitting there at night like many listeners worrying about what the headlines are going to be tomorrow morning. I'd rather know that my money's safe and it's stable, and that I'm getting the consistent growth in my money every single month and quarter and year. So that's my view on 12J. Again, it's another investment category, but again, it's local, as opposed to this discussion is, I think the benefits of going offshore are better, and I think it's very easy to go offshore nowadays.
Thank you. And here's another question. This is from Greg. He says, Magnus, what is your take on a regular long-term monthly contribution into the Ashburton Global Equity Fund? It's a bit tricky. Yeah. What do you think?
I don't want to comment on the specific fund, but it's a good fund. It's in the RMB stable, and by just putting money into it monthly over time, considering that it's a global equity fund, has done well. Just tick it and put your money into it. Check it from time to time at the end of the year, every 2 years, and just compare it to other funds. But I like the principle. That's how mom and pop investors actually build their capital. They sign up into one or two good funds and let the debit order do the work. I like that approach.
Okay, great. Thank you. And then Paul asks, what about green energy? Do you think that's a good investment area?
I'm no expert on that. I haven't formulated an opinion on green energy. I do apologize. I just don't have any knowledge to comment.
Okay, thank you. And then here's another one. We're in the craziest bubble in world stock market history at this current time. Higher valuations are occurring at the same time as the worst economy in 75 years. Are markets too hot? Martin, what do you think about that?
Well, I think that there's markets and then there's companies within markets. And
yes,
some of the fundamentals don't stack up in the world. The real results and the impact of the COVID pandemic are going to come through in the next couple of months. And I think you're going to see certain companies not being able to meet the expectations of their shareholders. However, what I would say to you is there are certainly winners and losers in any scenario. And in this scenario in the US, any person that has gone into the understanding of it in terms of customers going online, in terms of the changes in the world, in terms of even people's dietary requirements, where people are shifting in the US dramatically from meat to beyond meat and things like that. There are massive winners, and there will continue to be massive winners in the US who are scooping up enormous parts of the market. So I don't think that the market is so up. I think that there are many stocks that are doing exceptionally well, but at the same time, I think there are many stocks that in the next 2 years are going to be left wanting.
Interesting point. Do you agree, Magnus?
Yes, I certainly do agree. I think what the COVID virus has done, and I've read some articles about this, that it has brought forward and condensed in a very short space of time some of the technological innovations that the market has been expecting for a very long time. And then suddenly the future was on our doorstep. And in the sense that those technology companies will be sitting building viable businesses that normally would have taken 10 years for the market to understand and endorse. It all happened when the COVID virus hit, like the working from home. Everything is in the cloud. Computers and medical and life sciences that Martin referred to. Everything has been brought forward. So the future is happening very quicker to a certain extent. Yes, Tesla at a PE of 6,000 or something is ridiculously high, but other people would say it's not a motor car company, it's an internet company, etc., etc. So there's a scramble by investors globally to get into those companies that have a technological advantage, an innovative advantage that other companies in the world will never catch up to. And that's what's driving this market. Whether it's expensive or not, let's chat about it a year from now.
Right. Here's another question from Richard. How can you safeguard your offshore investments from the South African government without emigrating? What do you think about that, Martin? How do we do that?
Well, I wouldn't want to comment about how you safeguard, just that, at the moment, you're allowed to take a certain amount of money out legally. And when you take it out and you've invested it offshore, whatever that investment might be, for example, in our world as Orbvest, you invested into real estate building. It's through our various structures to get it offshore or through your own structures. As I said before, within 72 hours, you can be invested in a real estate deal, and your money's then in that deal for 5 years, and you'll see your consistent growth. And similarly in Magnus's funds, he can talk to that. But once your money's out and it's out legally, I can't see that changing or becoming retrospective.
What do you think, Magnus? You haven't immigrated.
I have to agree. I mean, sorry, Jackie?
I said you haven't immigrated. You are very positive about South Africa, but not positive about your money being in South Africa.
I love this country. I had to tweet this morning. I love this country, but I hate the ANC and what they're doing. So any criticism is not aimed at fellow South Africans. It's at the government. But be that as it may, as Martin says, if you've taken your money out legally in terms of the existing laws of the country, and you have a future government who says bring that money back, I think any government or jurisdiction where your money is will offer you some degree of protection. If it was smuggled out illegally, SARS could make a case, but to go and trace hundreds and thousands of individual South Africans and their money, nobody will be able to do that, no government. If it's a large amount of money, they will, like in the Dave King case, but that took hundreds and millions of rands to trace the assets of one individual. To do it with a whole generation of South Africans, the answer is no.
Well, Magnus, maybe if I can add to that and say, if the government ever did decide to do that, the rand would probably be sitting back at about 20 to 1, which means whoever got their money out now would still be enjoying a handsome return.
20 to 1 or maybe 50 to 1, because that's how absurd it would be.
Thank you. And then here's a follow-up question from Arthur. He says, when you go offshore, do you go into dollar or euro? And should you go lump sum or monthly amount? What's your view on that, Magnus?
Monthly amount's very difficult because the offshore investment platforms tend to have fairly high, large minimums in the sense that $20,000 is about where they will take a contribution for various reasons. And if you convert that into rands, you can't do it with 500 rand or 1,000 rand. You've got to build up to 20,000. The dollar, pound, euro, yen issue is, again, a very tricky one. The dollar has been dominant for a long time, but there are big swings in the currency markets all the time. Rather choose the dollar as your underlying currency, but if you're in a multi-currency fund, or the fund manager will make the currency calls, and don't try and outsmart it. The market is much smarter than you. Stick with what the rest of the world is doing.
Thank you. And here's a question for Martin from Germany, picking up on your comment about the markets. The scramble for tech companies, is it too late or still in time to buy Amazon and Tesla?
Well, I think Tesla at the moment, there's been significant growth. I myself have invested in Tesla all the way along. I think their technology is amazing. You see Teslas all over America at the moment, and they continue to grow from strength to strength. I must just tell South Africans that the change over the last 60, 90, 120 days to online has been astounding. When you are locked in your house here, you literally go online, whatever you need, no matter what it is, big to small, literally you place your order and the next day it's literally outside your doorstep. So the move to online is more pronounced than people even could think of. So Amazon will continue to be the behemoth in the world. I don't believe Amazon in 10 years' time will be the same as it is today. I think it'll be much bigger. And remember, that's the point about investing. Somebody said to me once, never invest for today. You've got to look at the world in 5 years' time and say, what will the world look like in 5 years' time? Will Amazon be bigger? Will Tesla be bigger than it is today? Will, for example, people be eating Beyond Meats as opposed to regular? And will the internet be bigger than it is today? And that's the premise of your investing. It has to be over the long term. You cannot be looking at it and wondering what the share price is going to be doing tomorrow or in 6 months' time.
I have to support you there, Martin. I take myself as a case study. In the last 110 days, I've been to the supermarket 0 times. I'm ordering everything online, my meat, my fish, my alcohol when I could do it legally. I'm ordering everything online. And for me, that was a very big, and I don't see any reason to go back. And I think that's what I said earlier. I think the markets have worked out that it's the Amazons that you've got to be with, because they are changing the way we live, where we live, work. I mean, the whole question of working from home is going to affect the property market. A lot of guys are going to say, I can work from anywhere. I can sit in Mauritius and run my business in South Africa. So we are going through a very turbulent time in many respects. But I think certain trends will come out, and I think this online shopping, especially in South Africa, is simply going to take off. We just don't go to the shops. Second point, in our household with 5 people, I'm the only one who eats red meat nowadays. Everybody else is vegetarian or eats the non-meat protein stuff. It's a massive, massive trend amongst the millennials and the younger generations. They're just not eating meat. They're ordering, and they will give you thousands of reasons why they're not eating meat and other kinds of products. So it's all happening as we speak.
Fascinating. And then Magnus, there's a question here from James. Does Magnus not support the small investor using the US online brokers as a reasonably cheap platform for shares and ETFs? So what do you think? Should people go that route?
Of course I do. Of course I do. And the youngsters are working it out themselves that to get some growth, you need to go offshore. And for smaller amounts, you can use Easy Equities, you can use Signia, you can use there are a couple of platforms that you can do with yourself. Nothing stops you, and very much so. I encourage people to do that. And people must learn that there's a big, big world out there, and they can do it with small amounts of money, and they can trade if they want to. That's all part of the learning curve.
Thanks. Martin, do you trade? And you're in the US. Do you trade through these small online brokers?
I absolutely do. In fact, in South Africa, we all know Easy Equities are doing an amazing job. In the US, there's a company called Robinhood, very similar, and they are showing astounding growth. It's just so simple nowadays. Even if you look at Orbvest, as we move towards a fully fledged fintech type platform, remember, all the world of technology will allow people to go and do what they want to do in a seamless manner, but going online, investing, and taking your money out when you want to. But most importantly, the fees are going to be at a reasonable rate, as opposed to going through these large entities. Up until now, we've seen that the fees have devastated your total returns.
Thank you. And then as we start wrapping things up, Daria has a very practical question and hasn't invested offshore before and would really appreciate some clarity. Are these offshore investments really offshore? I.e., when you withdraw, does it not come back to your local bank account? I am still in the dark about practically putting money offshore, she says. Magnus, could you just take us through the basics there for somebody who's starting from scratch with offshore investing?
Yeah, she's quite correct. If you're investing with smaller amounts via a asset swap fund, and there are many of them, your money goes out. The fund manager will take the money offshore, invest it there. But if you redeem your funds, the fund manager is by law required to bring it back and pay it back into your rand accounts. So that's an offshore onshore investment. If your intention is to get it offshore and perhaps join your money in one day, you need to physically take it offshore and set up the structures offshore, whether it's Orbvest or Mauritius or whatever the case might be. But that's one way of accumulating your capital until you've got enough to take it offshore and create a truly offshore exposure. Once you get into the offshore space, the choice of funds are mind-boggling. There are so many great funds, ETF funds. I mean, we have a global ETF fund which is extremely cheap, but you can get Vanguard and BlackRock ETFs. So it's a totally different world. And many South Africans, unfortunately, are not participating in that wealth creation that's happened over the last 10 years.
Jackie, if I can jump in, yeah? And I just wanted to mention that, you know, we have a lot of clients who come to us, they've never invested offshore before. They're terrified, they don't know how to do it. That's exactly what we do. We take you by the hand, you're allowed to invest up to R1 million directly, legally, straight out the country. Tomorrow morning, if you wanted to, it goes into our various structures offshore. It goes directly into what I've mentioned, the safe type real estate. We've got a new building we just launched this week in New Jersey, in the United States, near New York. And these are the kind of things that companies like Brenthurst and ourselves do. We take you by the hand and we make sure that it's easy and simple to do it. Everybody can do it. The only difference is, do they want to actually really do it right now?
Okay, well, thank you. That's a very good note to end off on. So thank you very much, Martin Freeman from Orbvest, for joining us, and also Magnus Heystek. Thank you very much. And thanks to everybody who joined the webinar. If you have any questions or feedback, please send them to jackie@biznews.com, and we'll see you this time next week.
Thank you. Thank you, Martin. Bye-bye.